Think about the last time you opened your insurance renewal. Your premium went up again. Maybe it was your home insurance, maybe your car, maybe your health coverage, maybe all three. You didn't file a claim, you didn't have an accident, you didn't change anything. It just went up. You probably told yourself it was inflation, rising costs, the natural order of things. It isn't. While you were absorbing premium increases, you didn't understand. The 5 largest insurance corporations in America reported their highest profits in history. In the same years your bill went up. This is the story of how the insurance industry became a system designed not to protect you, but to extract maximum money from you. How algorithmic pricing, secret data scoring, and regulatory failure turned your insurance bill into a profit machine. And how the people responsible have faced almost no consequences whatsoever. To understand what happened to your insurance bill, you need to understand what happened to the insurance industry over the past 30 years. In 1990, thousands of independent insurance companies competed for your business across every state. That competition kept premiums honest. When one company raised rates unreasonably, customers switched. Then came the mergers. Today, just a handful of corporations control the majority of home, auto, and health insurance across America. In most states, the top 3 insurers control over 70% of the market. And it is not just the insurers themselves. The reinsurance market, the companies that insure the insurance companies, is even more concentrated. 3 reinsurers control the majority of global reinsurance capacity. When they raise their prices, every insurance company in the world raises their prices simultaneously. At every level of the insurance supply chain, a handful of corporations have systematically eliminated competition over decades. And when competition disappears, so does the pressure to keep your premiums fair. Here is where the story gets darker. Your insurance premium is not calculated by a human being reviewing your individual circumstances. It is calculated by an algorithm fed by data about you that you never consented to share. A company called LexisNexis Risk Solutions sells detailed consumer data files to insurance companies. These files contain information about your shopping behavior, your driving patterns, your neighborhood, your financial history, and, in some cases, your prescription medication records. Your insurer uses this data to place you in a risk category. That category determines your premium. You are never told what data was used. You are never told what category you are in. You are never given the opportunity to correct errors before they affect your price. A 2021 investigation found that insurance companies were using credit scores as a primary factor in setting auto and home insurance premiums, meaning that 2 drivers with identical driving records could pay dramatically different premiums simply because one had a lower credit score. The driver with the worst credit score had not had more accidents, had not filed more claims, had not done anything differently behind the wheel. They simply had less money, and they were being charged more because of it. And between 2020 and 2023, the profit margins of the largest American insurance corporations increased by an average of 218%. Not revenue, profit margins. While your premium went up, their profits went up more than twice as fast. But premium increases are only part of the story. Meet price optimization. Price optimization is the practice of using data about you, and not your risk, to determine the maximum amount you are willing to pay before you switch providers. Insurance companies use sophisticated software to analyze your behavior, your financial situation, your history of switching, and your sensitivity to price changes. If the software determines you are unlikely to shop around, your premium goes up. Not because your risk increased, because the algorithm determined you would pay more without leaving. This practice is banned in some states. In most states, it is completely legal. Then there is the practice known as price walking, automatically increasing renewal premiums every year, regardless of claims history. A loyal customer who has never filed a claim and stayed with the same insurer for 10 years will in many cases pay significantly more than a new customer with an identical risk profile. The insurance industry has a name for loyal, long-term customers who absorb these increases without switching. They call them inert customers. You are more valuable to an insurance company the less attentions you pay to your bill. And the entire pricing system has been engineered around that fact. In recent years, a new factor has accelerated the insurance crisis, and it has been used to justify premium increases that go far beyond what the underlying risk actually requires. Extreme weather events have increased in frequency and severity. This is real. The insurance losses from these events are real. But here is what the insurance industry does not want you to know. Insurance companies have been withdrawing from entire states and regions, not just raising prices, but refusing to offer coverage at all. California, Florida, Louisiana, parts of Texas. Entire communities are being abandoned by the private insurance market. At the same time, those same insurance companies are reporting record profits. They are not losing money. They are choosing strategically to exit markets where they cannot extract sufficient profit while concentrating in markets where they can. Homeowners in abandoned markets are left with no options except government-backed insurers of last resort, which are themselves underfunded and increasingly unable to cover the claims made against them. The private market extracts profit from the easy markets. The government absorbs the risk in the hard ones, and the homeowner, who had no say in either decision, is left paying more for less coverage in an increasingly unstable system. How did this happen without anyone stopping it? The same way it always happens in every story the Dark Vault has told. Insurance is regulated at the state level in the United States, meaning there is no single federal regulator overseeing the industry. Instead, there are 50 different state insurance commissioners with varying levels of resources, independence, and willingness to act against powerful industry interests. The insurance industry is one of the most powerful lobbying forces in politics. It spends hundreds of millions of dollars every election cycle on state-level races specifically because state regulators set the rules insurers operate under. Price optimization has been challenged by regulators in multiple states. The industry has successfully fought back against most of these challenges. In states that have attempted to ban credit score-based pricing, the industry has lobbied aggressively to weaken or reverse those bans. The algorithmic pricing systems keep running. The profit margins keep growing, and every year, in the quiet envelope of your renewal notice, the bill goes up again. Here is what this story is really about. Insurance was invented as a collective protection mechanism, a community of people pooling resources so that when disaster strikes any one of them, they are not alone. The fundamental promise of insurance is simple: pay in when you can, receive help when you need it. That promise has been systematically dismantled. Today, insurance is not a protection mechanism. It is a profit extraction mechanism, one that uses your data without your consent, prices your loyalty as a weakness, abandons you when you need it most, and lobbies aggressively against any regulation that might force it to fulfill its original promise. Every story the Dark Vault has told follows the same pattern: housing, groceries, healthcare, government money. A system that should serve people gets captured by the people with the most money. The rules get written to protect the capture, and ordinary people pay the price. You are not paying more for insurance because you are a higher risk. You are paying more because someone with an algorithm and a lobbying budget decided you would. And until enough people understand exactly how this system works, nothing will change. Next time your renewal arrives and the number is higher than last year, you'll know exactly why. The Dark Vault opens every Thursday. Subscribe, because the next story is already in your mailbox.